the actual number versus consensus doesn't look right.
Well, look, sometimes you get numbers where, let's take Goldman. I mean, they had a huge quarter last year because that was the COVID quarter, and they just completely delivered and beat it. I mean, this investment banking division is a miracle. I mean, I can't believe how much money they made. David, 10% over return on equity, by the way. Remember when you felt that they might not be able to ever get to the high single digits?
After the crisis, it was unclear to me they'd ever hit double digits, and here they are in the 20s on return on equity.
Amazing. And, you know, look, there's the usual sniping back and forth, by the way, between Goldman and J.P. Morgan. I mean, these two, grown people telling me.
But competitive people.
Yeah, like, hey, listen, it's all private equity. No, it's not. Private equity did really well at Goldman, but they're taking it off balance sheet. It's not the way they made the quarter. Okay, J.P. Morgan just.
I want to come back to that.
Well, we will, but there's a level of consistency to J.P. Morgan that, frankly, I love. Okay, I just love it.
Okay,
people are not borrowing as much as I'd like yet. Spending is starting to go up, but trading was less than expected than Jamie spoke last time. Of course, Jamie, David, I mean, you know, Cher.
Yes, we go by the first names.
Yeah,
yes. Cher is not Cher, the singer. It's Steve Cher, the CFO
who's actually
of Goldman Sachs.
And not a sniper. Although
he may be a good singer. We don't know.
No, he's not a good singer.
Oh, he's not?
No.
Okay.
And he doesn't spin either. Consumer is crazily healthy from J.P. Morgan. And I know people are going to talk about the CPI and going to talk about how it's running too hot. If I were Jay Powell, which I'm clearly not, what would happen is he wears white shirt and blue tie. That's what he does. I would say, you know what? Maybe some people are finally making money. We're not going to sit here and just say used cars, we got to raise. Okay? We're not going to sit here and say freight. Now, freight, ConAgra, hurt. PepsiCo, able to pass on costs because they're doing so well in soda, carbonated. They don't like to call it carbonated beverages.
You're all over. So you moved from J.P. Morgan right to the CPI kind of seamlessly. Our viewers may not be keeping up, but I am.
What am I supposed to do?
I don't know.
It's, as you said, Jim, earlier before, it's a tense day. We got a lot to digest.
Day. I'm trying to fit it all in one little place here.
But just looking at the way JPM's trading versus Goldman, the reserve releases at JPM, the miss on net interest income, are those not liabilities relative to what Goldman printed?
I thought that they could have very easily said that there's a change to their net interest income guide, and they did not. I regarded that as positive.
Right. And there's Jamie talking about the quarter benefiting from a significant reserve release. Of course, they don't get credit, and he doesn't want credit for that. It was over $3 billion, wasn't it?
Right.
But that does have the effect of pushing earnings up, revenues not up.
In investment banking. Oh, don't you wish?
Buy me a Coke.
Go ahead. Is that what we do?
Yeah, when you say
you've never done this?
Yeah, right.
The playground's like 40 years ago.
Exactly.
Right?
I'm just saying that I wish that I came back. The people at Facebook and Google maybe actually say, you know what, those guys are making money.
Right.
You know, they're like so used to saying those Eastern idiots. No, the investment banking numbers are very good.
They are. And trading does seem, all these firms will tell you they've made market share gains. And it does appear, the trading business to some extent has flowed from some of the European banks that we know are having
We're
issues.
Pulling back. Archegos, thank you very much.
Yeah, thank you very much. And obviously JPM, Morgan Stanley, Goldman Sachs, certainly among the beneficiaries there. But I wanted to come back to asset management on Goldman Sachs because they like to push this, but it's true. It's got the added benefit of being true. They have been arguing they should be getting a higher multiple because of a recurring revenue stream they have from asset management. And then obviously you're going to have quarters where they have enormous gains from their private equity investments. Right. Their argument has been, we got a Blackstone that's been buried in Goldman Sachs, alternative assets that we don't get credit for. But there's a look, $5.13 billion. That was obviously a huge year-over-year number. And then they also had $3.7 billion in gains, Jim, from public and private investments. That's private equity. Now, you're not always going to have those kinds of gains.
But they have.
But they did, and they raised $75 billion in new funds.
Was that not amazing?
And that's all,
by the way,
potentially recurring revenue. So that's not using the balance sheet. That's just raising money, and that is a la the Blackstone kind of a business where you'd hope to get a higher multiple.
And you're not mentioning Apple? I think Apple's starting to move the needle there.
Oh, the Apple Card.
I think it's starting to move the needle.
I'll tell you one thing we don't mention much is that consumer. Remember Marcus? Remember how we would spend time talking about that?
Right, that's Apple.
It doesn't, but it adds up to nothing. What is it?
But no.
Net revenues in consumer banking were $363 million.
Okay, well, that's nothing. That's a rounding error.
Nothing.
But I like Apple.
Expenses down 17 will get your attention at Goldman, Jim, as people start to look at areas of operating leverage.
Right. Right. Very much. You know what I really loved about Goldman? Some people tell me net interest income was downgraded cut by JP Morgan. What I loved about it is I now question the need to work at the office.
You now question it.
With these wealth management numbers, why come back? They're doing so much better.
So
I'd make them stay at the Hamptons full time.
Shepard Smith here. Thanks for watching CNBC on YouTube.